Welcome back. Trading game plan for Wednesday, April 15th. We'll start out with the market. Always want to start out with the market to have a bigger picture idea. And again, I actually had a couple of emails about this over the week. Look, there's a lot of people that don't watch the market at all, which I find fascinating. And there's nothing wrong with trading individual stocks without necessarily adding a component of increased expectations because the market is obvious or it's not. Nothing wrong with that. However, it does help. There's not a question it does help. So you should at least have a really good idea every day. Is the overall bigger picture of the market obvious? So that's why I'm always starting out with that. I get, just answer a few emails, and I'm going to give you a reason why here. We have 1, 2, 3, 4, 5, 6, 7, 8, almost 9 weeks if you basically want to draw it. A channel of where we are here, of where we can't get out of. 8 weeks of indecision in the market. That's a lot of frustrated trading compared to what we had for this 3-week window here in January and February. So taking it out to a little bit different time frame here on the weekly, this is the daily. This is actually confirming moving averages are pointing up, but they're not really doing anything significant. Again, I'm using the 20 EMA and the 50 on the daily. You could actually say that we are forming a longer-term pennant. So consolidation will usually lead to an expansion in volatility. We are closing, or at least trading near the upper end of the range, but what we need to see is, are we going to break this pattern of 1 week up, 1 week down, 1 week up, 1 week down? So essentially the point that I'm trying to make here is that the expectation for follow-through in the market is very slim right now, which should have you not adding to individual positions, as well as probably only trading stocks that are outside of the previous day's trading range. Now, I know that we've been getting some lower openings with rallies, some higher openings with sell-offs, so the pickings have been slim, but you know what? Deal with it. The traders that are going to ultimately make money in the long term realize that you're only going to make a significant portion of your actual take-home pay on 40% of your trades. So you have to be very, very diligent to not overtrade when it's not obvious. I can't stress that enough. You need an awesome game plan going into the day. You need to have a really solid expectation of what you think will happen in the first 90 minutes to 2 hours, and trade it aggressively if you get follow through in even 3 out of the 10 stocks. Let's, just for argument's sake, let's say you have 10 stocks. So that's basically where we are in the market. We'll just go over the Qs and the Dow. Spiders, not really that obvious other than the longer term uptrend. A little bit relative weakness on the close in the Qs yesterday, and diamonds very, very similar to the spiders, so not a clean picture overall. Again, you can see multiple weeks of consolidation here. We want to talk about Intel very quickly, which was last night, and the trade in Intel. We're opening right now about a quarter lower from where we closed. Mixed on the earnings front, but you can clearly see here, again, this is a weekly chart. Maybe I could pull that down just a little bit so you can see it. Weekly chart there, and longer term, last 6 months, and a downtrend confirmed by the shorter term moving averages. There's no reason to be long this stock at all. Really, the bottom line is it was mixed. It's opening lower. I'd look to be looking short. I don't normally trade this. Not a lot of intraday volatility. You can see the trading ranges are pretty small here. But if it is something you trade, I'd still only be looking to short sell there. The big daddy that everybody's going to be watching today, NFLX. We are clearly at this 480 level. We got above it a few times, keep getting rejected. And yesterday, this week, no difference in that whatsoever. Now, what's interesting here is, again, I got some emails and the feedback is awesome. Why am I not drawing the lines all the way across the top here where it actually traded? Well, I'm looking for a level that it keeps pushing through and gets rejected, and that's clearly in this window 480. So if I'm looking at all, you have to like the gaps 1, 2, 3 gaps higher. That's pretty impressive into this level. Again, we have no idea what's going to happen later tonight, but you can't ignore 3 power gaps like that right up into resistance. And quite honestly, if this wasn't earnings season and we got that kind of price action with massive gaps like that, I would be expecting the stock to consolidate up in this level and then eventually push through. But because it's earnings season right now, look, the way I always explained it when I was managing prop traders is the charts, for the most part, the charts are out the window when you get a significant catalyst. We did not get a significant catalyst, and Intel on top of the fact that the stock doesn't really move a lot on an intraday basis anyway, but clearly that's not the case here. A catalyst here could really put this stock in play, especially if we clear this 480 level. So keep in mind, you need to trade stocks that match your resources, which essentially means that you need to trade stocks that you can handle getting whipsawed around until the stock actually finally does what it's supposed to do. I know a lot of people jump over to trade options if they want to trade something a little more aggressively than they might because they couldn't afford it with margin. I will tell you flat out, options trading is a completely different business than just trading a straight out equity position. So if you're in that category where you jump over, make sure you have a really solid foundation in understanding volatility and time to expiration before you just jump in because of the leverage in options. Today we also have excuse me, Bank of America. Pretty much neutral right now. Again, if I am mentoring you or we're working together, I see not much going on right now, and I would be telling you pretty much descending wedge in the middle of the last 5 or 6 weeks trading range. I don't see anything going on here. Maybe the fact that you broke this longer term downtrend, but nothing going on here. Again, you want a screaming edge. You want to be able to say, are buyers and sellers clearly in charge? No. Sellers maybe, but last 6 or 7 weeks are neutral. So you need to decide, if you're a swing trader, how far out are you going to determine your edge. And again, if we zoom this out a little bit more, you can get a much better picture of the longer term picture. There's nothing going on in the stock for a while. So essentially, what does that mean? That means to me, if I'm trading it or if I'm allocating money to you to trade, find a better idea. That's my analysis of any stock like that. You don't need to force a trade just because it matches a dollar amount that you can handle. Maybe you can trade a little bit more share size. Find great ideas. If and when you lose money, you want to be able to exit the trade to say, I lost money on great ideas. If and when you make money, you want to say it was a great idea, not that you were like this brilliant prognostication of, I'm so smart. You don't want to get caught up in that. You want to say, I put and allocated money to my best ideas because of this. When you can do that consistently, that's where the consistency in the P&L comes from. Next, we have PNC. We have reported. We actually said on Monday that a lot of the financials are in play this week, and that's absolutely the case. PNC I like a little bit better than some of the other ones here. We are actually flagging a tight flag, nice after a push down. Pretty good volume yesterday. You can see that we did almost twice the normal volume, which is actually pretty telling. So I do like a retest at 96.50. And again, I'm not. How can I word this? I'm just doing the charts here. I'm not going to be discussing, interpreting what the numbers were. Anything that came out pre-market, I'm not going to mention that. I'm just doing strictly overnight charts, and we can all do our own homework on whether or not we want to trade it on any kind of gap in the morning. Next, we have Schwab. Schwab, again, this is very similar to what we were looking at in NFLX before, in that it keeps hitting a level and getting rejected. In this case, we're essentially looking at the 30.75 level, which, again, this week, same exact thing. I do kind of like that we're hovering around the upper end of this range right now, and you can see longer term, we're very, very nearly at all-time highs in the stock. If you read Reminiscence of a Stock Operator, extraordinarily difficult to do anything but look for longs at all-time highs. So I would continue to look long. Schwab. Next, we have USB. Not a lot going on here. Again, a couple of things, actually, from a technical perspective. That chart looks very similar to the spiders. Not quite a perfect pennant, but certainly could forecast out that you would see that would end up continuing to consolidate. Again, risking money is what you should be doing when it's obvious. This is not obvious. Let me look at how we would draw this out. This is yesterday's close. We're smack in the middle of the price range for probably the last 6 months. There's no edge there. Let it tip its hand, whether it's an earnings catalyst or whatever the heck it happens to be. Don't jump in until it's obvious. SanDisk, I would absolutely continue to look for the short side. As a matter of fact, let's actually jump into the stocks that have earnings today. Just want to filter it out. The stock list is actually much bigger than this, but you can see here today average volume over a $500,000, you could start it out. Day trading, I usually go with $1 million. It's because we never know who we're speaking to. You want to make sure that you're trading enough liquidity to get out. Swing trading, this number is not as significant because you can work an order over a little bit longer time period, unless you're trading pretty big size. So you can see we only have 18 stocks that meet this criteria today. So in my opinion, you need to make sure that you're trading liquid stocks, swing trading or day trading, that also have a relative average true range that allows you to earn enough money. That's always a big challenge, to balance the amount of money you would like to potentially make versus what you could potentially be risking on a trade. So liquidity and volatility versus your skill level and risk tolerance is always a balance that you have to learn as a trader. And it takes time. It takes some time to figure out what price range is correct for you. It takes time to figure out which method of finding a list of stocks works for you. Do you trade the same stocks every single day and look for patterns, or do you look for new stocks every day based on technical setups and news? I don't recommend all three of those. It's very difficult to do unless you are very, very consistent and have a lot of experience. For a newer trader, I would be sticking more towards a basket of stocks that you trade on a regular basis. And also, I want to add to that, you can add and subtract to the list. If something moves into a different price range and it starts to trade poorly, where it's not readable and you don't get enough movement, there's nothing wrong with taking that stock out and putting something else in. Pay attention to the bigger picture. Go to a screener, look up different groups, and then within those groups, just again, let's just do this real quick. You can clearly, and again, I just want to comment on that. I'm never going to show anybody something they have to pay for. So this is the free version of FinViz. Everything I'm doing right now is the free version. If you want to pay for something, nothing wrong with that. I'm just, want to make sure that I do anything that anybody can use without too much of a hassle. All right, so obviously we're looking at basic materials from yesterday. Go to overview. 623 stocks. So we want to go back to that 500,000 shares. Pulled up 321 stocks. Let us actually take this a little bit further and pull up an average true range of at least $1.50, so we get a little bit of volatility in there. And you can see that's sorted down to 5 stocks. Let's go to performance. Let's go to performance for the last quarter. See if any of that price action from yesterday actually coincides with a longer term chart with a shorter term opportunity. So you can scan through these pretty quickly. Possibly a breakout gap fill here through CLR. Same thing here, CRZO. Looks pretty interesting. So you get an idea. You get a pretty good idea of which ones you should be looking at. Really, my goal is to help you filter through all of the noise to get the stocks that match your criteria. All right, so Netflix in play today. Bank of America, BAC, PNC, Schwab, SCHW, SanDisk, SNDK, USB. Trade the news, trade the volatility that matches your resources. Have a great day.